Thanks for tuning into the Finance News Network. Today, I'm joined by Brickworks Managing Director, Lindsay Partridge. Hi, Lindsay, and thanks so much for your company.
My pleasure.
So for those who aren't familiar with Brickworks, just give us a quick introduction.
Well, it was formed by a group of Sydney brickmakers back in the early 30s. And at that point in time, it had 11 brickworks around Sydney. And it listed on the Australian Stock Exchange, 1961. 1968, they did a famous swapping of shares with Washington H. Soul Patterson because they were worried about being taken over by London Brick. Progressed, without really doing much for quite a while. When I took over in 1999, we had 5 brickworks in 2 states. We did a major acquisition of Bristol in 2003, which made us national and Australia's biggest brickmaker. And we've sort of evolved from there, and recently we bought an American brickmaker, Glen-Gery, last year. So now we have something like 40 factories, 2,000 staff on 2 continents, have investment portfolio. So the company's grown quite a bit since those early days.
Now to the 3 business units in more detail. Just tell us about the building products unit.
Well, today our building products, there's some well-known family brands that everyone will be aware of. Austral Bricks, biggest brickmaker in Australia. Austral Masonry, number 2 masonry producer. We have Bristol Roofing. We're the number 2 roofing producer in Australia. So a lot of big brands that are well known. We also have some precast operations. And of course, in the United States, our latest investment, the Glen-Gery Corporation. We've got 10 factories there, based in the northeast, focusing on architectural work like institutions, schools, hospitals, that sort of product.
And your other department, property development?
Well, yeah. Well, we had surplus land, and the opportunity came up it was zoned industrial. So we formed a joint venture with Goodman almost 15 years ago now. And it's evolved enormously in that period. Total value today is $1.7 billion. We've still got $300 or $400 million worth of land to put into that. So it's got great potential going forward. And of course, it had a great result in this last period.
And lastly, your investments division.
Soul Patterson's, as I mentioned before, we swapped 1 million shares in 1968. Each company continued to buy shares in each other. Today, that shareholding stands at, we own 39% of them and they own 43% of us. Our original $26 million investment in 1968 today is worth $2.5 billion.
Now let's touch on the first half 2019 results. A great set of numbers. What are the highlights?
Well, property was a real highlight. We've seen that cap rates are compressing as interest rates are falling. And when we only had a couple $100 million in property, that didn't make much impact. But when you got $1.7 billion, we had enormous growth in the asset value. We had a number of buildings complete, and so we had development profit. We had one sale of an old brickmaking site, but $132 million. It was the best property result we've ever had.
Now just diving into the US market, just tell those who aren't familiar about your rationale behind snapping up Glen-Gery and moving into US manufacturing.
Well, one of the problems we had was that we were concerned that people were looking at us and couldn't see that we could grow our building products because we've got 50% market share in our main business. There's no way that we were allowed to take up any higher market share. So we had to go offshore, and America was really a desirable place to go with lower tax rates, common language, similar laws and culture. So we investigated it for over a year. We had a team on the ground, and we decided if we went into the northeast area, we could have an area there that we could gradually secure and become a very strong and major brickmaker in that area. Glen-Gery is a business that's focused on architectural work. We do schools, hospitals, universities, high-rise buildings in New York. 65% of our sales into areas that are not related to housing. So it's quite different to the other brickmakers there. And of course the opportunity is you get much better selling prices when you're making that sort of custom product.
Now to your share price, which is up 19% at the time of this recording over the past 12 months. What can you tell us?
Well, I think it's just a recognition that the company was growing, that there was great opportunities in our property. And of course our major investment has increased over $500 million this year. So that's an enormous, staggering growth, and it's reflected in the share price. But our view is actually that the share price at the moment is at the highest undervalued point that it's ever been. We actually think that should be worth something in the order of about $25 to $27.
And just lastly, before we let you go, what's your outlook for the second half?
Well, I think it's going to be a record year for property, clearly with the first half. So that's good. Sols will continue very strongly with some of their investments, being New Hope Coal and TPG Telecom going very well. Building products is going to be down, But it's only 25% of our business now, so it's really quite minor in the scale of things. So overall, I'd be saying we're going to have a record year.
Well, congratulations on your wonderful results, and thank you so much for your time, Lindsay Partridge.
Thank you very much.